Hello, and welcome back to Inspiration and Networking. Today is the second in a series of videos regarding home loan financing, and today's topic is regarding credit. Hi, my name is Donna, and I'm happy to be here today to share this information with you. So today we're going to talk about the credit report. It is going to be about the first thing that you are working with your loan officer on when you begin your loan process, and that is that's for pre-qualification, pre-approval, etc. One of the first topics of discussion will be your credit report, and the loan officer will be obtaining a copy of your credit report, of course with your permission, to go ahead and move forward with that portion of the loan pre-qualification process. The credit report consists of the FICO scores, or the credit scores, and they are made up from the three different credit bureaus, which are TransUnion, Equifax, and Experian. And these three credit bureaus report a credit score based on your credit report activity over the past 7 years. And so the lender will use the middle score for their qualification as part of the qualification for the home loan. If there are more than one borrower on the loan, then they will use the lowest middle score of any of the borrowers. So if there are 5 people on the loan, and I've literally processed loans where there've been that many, the credit score that is used for the qualification purposes, and including loan pricing for the interest rate on the loan, will be the middle score of the borrower who has the lowest middle score of the entire group. So anyway, the other thing that they're going to be looking at is they're going to be looking at the overall history of the credit. So again, it's a 7-year snapshot of what has taken place in a borrower's credit history. So they're going to look at the number of accounts, the age of the accounts, the credit to debt ratio, or credit limit ratio, if you will. So if you have a credit card that has a credit limit of $5,000 and you're at $4,995, well, you've used almost all that credit there. And so that can be affecting your credit score sometimes, most often, a little bit negatively. And so that will, because it signifies potential risk. So it's best to, keep those credit cards paid down under 50% if possible, but yet, again, making your payments on time is also very, very important too. So I just wanted to toss that in there. Credit history, as I said, is reflected for 7 years, but if there are public records such as bankruptcies, those can be as long as 10 years on your credit report from the date of discharge. The exception would be a Chapter 13 bankruptcy, which is the reorganization bankruptcy. Gives you a period of time, generally 3 years. I've seen them out as far as like 5 years, but most of the time it's about 3-year payout, to pay off certain debts that are determined at the time of the trustee hearing that goes on in a bankruptcy court. So once that is paid out and the Chapter 13 bankruptcy is discharged, then it will just sit there as a public notification on the credit report for another 7 years. So it still will be visible for 10, because there's the 3-year payout period, and then there's the 7 years after the discharge that it just sits there. A Chapter 7 bankruptcy is the complete discharge of debts, and that's going to stay there for 7 years. Foreclosures. I want to talk about foreclosures a little bit. Foreclosures are not something that you want to have. I mean, I realize that life happens, and most foreclosures are caused from job loss. So hopefully you don't experience that, or if you did experience that, it was far in your past, and depending on how long ago it was, it may or may not have any impact on your ability to get financing. There are some loan programs, however, that look at that for 7 years, and if it's more recent than 7 years, then you have to consider a different loan program, because not all loan programs are as flexible with that. Some loan programs are 2 years or even 1, depending on the circumstances. If they can be documented and proven that they're beyond your control, then some loan programs will allow that. But again, this is something that you would want to talk to and discuss thoroughly with your loan officer. Judgments. Sometimes judgments are going to show up on a credit report, and sometimes they're not. The only reason that they really wouldn't show up on there is a couple of reasons. One, if they're too new and it just hasn't been picked up yet by the bureaus, or the lender, their subscription that they have with their credit report, with the credit reporting agency. It's not theirs, it's an independent one, but with the credit reporting agency may or may not include reporting judgments. But when the preliminary title report comes in from the title company, they also do a judgment search, and they will show up there. So judgments have the ability to affect the title on the property. If, say, you're doing a refinance perhaps, and you have a judgment, well, that judgment is going to have to be paid off and satisfied, and evidence of the satisfaction and payment, and the source of funds if it's a large amount. So they're going to want to source that too, where the money came from to pay that off. So but that has to be satisfied before the loan can close, because what happens if you pay off your first mortgage, that goes away off the title report, and then the next thing behind it moves to the top, and a lender is not going to put their lien behind a judgment. They're not. So you're going to have to, if there is such a thing on there, it's going to have to be paid off. And judgments don't subordinate to anything. So, I mean, it's pretty rare that you ever find that, and it's very rare that you find a lender that's going to accept that, because, as I say, judgments are something that can affect the title of the property. So those are some very important tips. Of course, paying your bills on time. One thing I also wanted to note, with paying a mortgage, you have a grace period within that mortgage. It's usually 15 days. And then after that, the lender can charge a late fee that can be up to 5%, 4% if it's a government insured loan, but 5% typically if it's a conventional type loan, of the payment amount, which can be pretty hefty depending on your payment size. And so it can sit there as a late fee. And of course then, but as long as you pay it within 30 days, then it's not going to reflect as a 30-day late payment on your credit report. 30-day late payments on mortgages really hit your credit score very hard. So do everything possible to avoid that happening. Certain months have 31 days, July, August, those months, December, January, all those months that have 31 days. Just because you might pay the payment on the 31st day, it is a 30-day late because it's paid after 30 days. So make sure, if you have to go within a month where you have to pay that, say close to the end of the month, make sure that it is before the 30th day. Because otherwise you don't want to have a 30-day late payment on your mortgage, especially. So hopefully this answers some questions that you might have and kind of helps you see that, there are credit issues out there that happen to everybody. But at the same time, again, you can contact the credit bureaus if there's something on your credit report that doesn't appear right. Again, your loan officer is going to help you to let you know, how to be able to contact them, or you can even look it up online. I mean, that information is available and it's free to you to search out and contact the credit bureaus, and you can challenge a credit item if it's not yours or it's not reporting correctly. That's incredibly important that it reports correctly, because it's against the law if it doesn't. The Fair Credit Reporting Act that started back in the 1970s and then was revised in the early 2000s and mid 2000s. It absolutely has it requires the information to be reported correct on your credit report. So again, hopefully this has answered some questions. If you would have any questions or you just want to make some comments, please comment in the comment section. Also, please subscribe and like. And this is a networking and inspiration channel. So if you have your own channel or are thinking about starting a channel, you can talk about all those things that you have experience with. I have 35 years experience in mortgage banking. I'm retired. I retired a couple of years ago, but certain things remain the same and consistent. I mean, there are changes that happen all the time, but most things are pretty consistent, like what we'll be talking about in this series. But anyway, please like, subscribe, and share with anybody that might have a YouTube channel that they're thinking about either starting or they have one that they haven't really posted on. So let's interact together and share some ideas and some other inspirational thoughts and network. So have a wonderful day, and thank you for viewing today. Have a great day. Bye.